We've, the United States, done something pretty extreme, and we don't know how bad the troubles will be yet. Whether we'll be like Japan or something a lot worse, I think we do know that we're flirting with serious trouble. Charlie Munger. While the 1970s recession that wrecked the economy may be well behind us, Charlie offers another stern warning that should make you nervous. You may wish you had a Volcker 1970s style recession instead of what you're going to get. According to Charlie, this suggests that the approaching crisis could be worse than the 1970s, since you have every reason to be concerned. Charlie Munger has discussed his forecast for the economy, inflation, currencies, and other issues that should concern you extensively in meetings and interviews throughout the course of this year. Charlie, a billionaire investor and Warren Buffett's business partner at Berkshire Hathaway, reportedly predicted considerable trouble for the markets at the Daily Journal's annual meeting earlier this year, saying, "What we're getting is wretched excess and danger for the country. Everybody loves it because it's like a bunch of people getting drunk at a party. They're having so much fun getting drunk and they don't think about the consequences. Eventually there will be considerable trouble because of the wretched excess. That's the way it's usually worked in the past." He went on to define what he meant by wretched excess. Certainly the great short squeeze in GameStop was wretched excess. Certainly the Bitcoin thing was wretched excess. I would argue venture capital is throwing too much money too fast, and there's a considerable wretched excess in venture capital and other forms of private equity. There's never been anything quite like what we're doing now. We don't know what's happened in other nations. If you try and print too much money, it eventually causes terrible trouble. We're closer to terrible trouble than we've been in the past, but it may still be a long way off. Those last three statements are quite intense. Charlie is referring to the fact that since March 2020, America has produced more than 40% of all US currency ever produced. This is known as printing money or producing money out of thin air, and it leads to inflation. This latest financial market instability in the United States coincides with the Federal Reserve beginning to wind down its multi-trillion-dollar asset purchase program, which has been in place practically non-stop since the financial crisis. Many people have criticized the initiative, accusing the Fed of printing too much money too quickly and causing global financial markets to become unstable by maintaining ultra-low interest rates. Historically, when governments used money printing to try to relieve financial difficulties, it resulted in high inflation. This time seemed to be different until late 2021, when things began to change. Prices began to climb dramatically, and there were not short-term hikes. Now, price increases have grown more permanent as businesses have discovered that they can pass on greater costs to consumers who are more than willing to pay the extra cost. You may have heard about the current 40-year high inflation rate of 8.3%. You pay this inflation tax whenever you fill up your tank or visit the grocery store. All this indicates that in the long run, prices are less likely to return to normal levels. These rates are also already having an influence on the real estate market. The 30-year-old mortgage rate has risen above 6%, and real estate firms have begun to lay off workers in anticipation of a reduction in demand. Private company valuations are also starting to fall as investors rethink their growth potential and other options. I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero. That is my working hypothesis. Charlie Munger. Over the past 10 years, there have been numerous other similar warnings, but this one seems a little more grave than the others. Munger's views on these matters are always relevant due to how knowledgeable he is. The multi-billionaire investor spends most of his time researching and analyzing various topics, and that is why he is familiar enough with the past to recognize how historical economic developments might be somewhat relevant to the present, much like the founder of Bridgewater, Ray Dalio, who has used history to create several models of how current-day economic problems may play out. If you don't want any of these predicted financial crises to catch you unaware, we suggest you to subscribe to our channel and check out our videos on how to be financially prepared. Thanks, and I'll see you in the next one.